Azarga uranium is an interesting opportunity in the uranium area. Uranium and uranium stocks have been in a bear market up until about a year ago. This is after the Fukushima disaster in Japan and followed by a couple other incidents across the globe, Chernobyl, 3 Mile Island. The world turned very negative on uranium and nuclear energy production. However, with the new focus that greenhouse gases are making the environment warmer, causing significant issues, people are starting to look for energy that is greenhouse gas free. And uranium is a very potent energy source that does not produce any greenhouse gas. This is a big opportunity for the uranium industry and nuclear power to help solve one of man's biggest problems today. So Azarga uranium has some very strong resources here in the US. Some of the other producers are actually in politically unstable areas of the world. So this should give additional value to Azarga uranium's energy resources here. The value on these resources has been confirmed, in our opinion, by the acquisition that's taking place by Encore Energy. They are also a uranium company. They're buying the Azarga with all stock. So the combined entity is still going to have a strong balance sheet and it's going to be able to be larger. This will drive operating efficiencies, capabilities as far as being able to be large enough to get onto a U.S. listing, whether it's NASDAQ or the New York Stock Exchange. This will improve visibility for the company, which should drive to higher valuations for the combined entity, in our opinion. The uranium sector is going to be, in our opinion, a very strong, robust growth area with very good dynamics for unit growth and also still ahead more price recovery. This should make the uranium sector a very interesting place to have an investment. Azarga is a little hard to buy. The symbol here for the US pink sheet ADR is AZZUF. It doesn't trade very well. If you're going to buy it, you need to be very careful and use limits. The entity should begin to trade much better after the Encore acquisition takes place, and the combined entity is going to have a much larger market cap. But until then, be very careful if you opt to buy this. This is a high-risk company. Their resources are in place, but they need to still develop them and bring that production to market. So this is a very early stage company, and you're somewhat dependent on it becoming a more stable enterprise with the Encore acquisition going through. We do think it's going to go through, but we cannot be assured of that. This stock is definitely riskier than most of the things that we talk about here at Building Benjamins. BuildingBenjamins.com has a full report on Azarga and the potential merger, probable merger. Please take a look at that there. Also, our disclaimer is on the website. Please read that as well. This is not investment advice. This is only talking about a stock that I own in my own personal portfolio that I thought some people might find interesting. You're responsible for evaluating whether the stock is appropriate for you and responsible for the decision.